The ultimate mission. Decoding the XRP 1-hour chart on this very day. Jaffo, my trusted supercomputer AI. Fire up the systems. Deploy machine learning models. Unleash the theoretical chaos analysis. Activate experimental psychology scans. And synthesize every layer of intelligence into one unbreakable forecast. The comic crypto crusaders are on standby, but this battle starts now. Jaffo. Prepare my suit for the mission.
In the sprawling metropolis of Crypto City, where digital fortunes are forged and shattered in the blink of an eye, a new signal pierces through the noise. Our hero, XRP Prime, the embodiment of XRP, stands at a pivotal crossroad. The date is December 27, 2025. The city's digital skyline flickers with the number 1.8773. Is this the launching point for a skyward ascent or the edge of a treacherous cliff? The Oracle, a powerful AI known as Jaffo, has spoken. Its 18 eyes, spanning the realms of technology, physics, and human psychology, have aligned. The verdict, a high-conviction mission launch. Codename, Long. Let's break down the intel. Layer 1, the tech specs. The Oracle's time series models show a clear harmonic energy signature. This isn't a peak, it's a power-up sequence. The price is lagging behind its true value, like a hero holding back his full strength. What looks like a pause is actually absorption. XRP Prime is drawing in market energy, preparing for an explosive move. Now for Layer 2, the laws of the universe. The city's chaos has subsided. A clear path has emerged from the random noise of the market. XRP Prime isn't just drifting. He's riding a deterministic wave of kinetic energy, propelling him upwards. The very fabric of the market is shifting from disordered chaos into a new phase of ordered, upward momentum. Imagine countless small streams of energy converging into a single, unstoppable superwave of buying pressure. That's the force building behind our hero. Finally, Layer 3, the heart of the city, its people. The citizens of Crypto City are rallying. Game theory shows that buying and holding has become the dominant strategy. The villains, the short sellers, are trapped in their own dilemma, paving the way for a massive capitulation, a short squeeze that will fuel XRP's flight. The city's mood is one of confident greed, not the wild euphoria that signals an ending. The people's eyes, their very focus, are locked on the towering skyscrapers between 1.90 and 2.00. They are willing this reality into existence. The Oracle's meta-learner synthesizes all this data, calculating a staggering 93% probability of success for mission long. The strategy is clear. Initiate entry protocols on any minor dip, or engage immediately if momentum surges. The target is the psychological magnet zone of 2.00 to 2.15. XRP Prime is ready to soar. But even the most powerful heroes must respect risk. Every mission has abort criteria. A breach of the 1.80 support structure would be a critical failure, signaling the collapse of this bullish foundation. We must also watch our allies. If the colossal champion, Bitcoin, stumbles and falls, the shockwave could drag down the entire league, regardless of XRP's individual strength. We'll also monitor the enemy's movements. If XRP Prime charges towards the 1.90 barrier but his energy reserves, the trading volume, begin to fade, it's a bull trap. A breakout requires overwhelming force, and we must be wary of hidden ambushes. A sudden wall of sell orders appearing on the order book would mean the villains have set a trap, invalidating the mission. And finally, there's the wild card, the shadowy council of regulators. An unexpected decree or a negative headline from their chambers could be an exogenous shock, a force beyond our model's predictions. In such a scenario, all baits are off and immediate retreat is the only option. So, what is the call to action? The data is clear, the signal is strong, and the hero is ready. XRP Prime prepares to launch, targeting the heavens of the crypto market. The confluence of technical power, theoretical certainty, and psychological drive is a rare event. We are witnessing the assembly of a legendary move. The mission is a go. This is the story unfolding in Crypto City. The stage is set, the players are in position, and the world is watching. Will X Ronin Prime reach his target? The data says yes.
Let us now examine and debrief our mission. Layer 1. JAFO, Machine Learning and Artificial Intelligence Stack, Module. Time Series Prediction. Bullish, 91%. Detailed Technical Synthesis. The time series analysis employs an ARIMA, Auto-Regressive Integrated Moving Average, model with parameters 5, 1, 5, optimized via grid search, coupled with an LSTM, long short-term memory, residual correction layer. The primary decomposition reveals a strong seasonal component with a 4-hour periodicity that is currently aligning with the secular trend. The ADF, Augmented Dickey-Fulleler, test rejects the null hypothesis of a unit root at the first difference, confirming stationarity in the trend-adjusted series. Furthermore, the spectral density estimation highlights a dominant frequency corresponding to a 12-hour cycle, which is currently in its ascending phase. The model detects a volatility clustering event via GARCH 1 processes, suggesting that the current standard deviation of price returns is expanding in favor of the bulls. The upper Bollinger Band, 22, is being tested, but the bandwidth is widening, indicating a walking the band scenario rather than a mean reversion. Volume-weighted average price, VWAP, remains below the current price, acting as dynamic support. Module. Regression Prediction. Bullish, 85%. Detailed Technical Synthesis. We utilized a stacking regressor architecture comprising ridge, lasso, and elastic net as base estimators, with a gradient boosting regressor as the final meta estimator. Feature engineering involved creating lag features, T1 to T12, rolling statistics, mean, STD dev over 24 hours, and interaction terms between volume and RSI. The R-squared value on the validation set is 0.89, indicating high explanatory power. The coefficients for the volume and momentum_1H features are significantly positive, p-value less than 0.01, confirming that volume expansion is a leading indicator for price appreciation in this specific regime. Multicollinearity was handled using VIF, variance inflation factor, filtering, removing redundant oscillators. The residuals analysis shows a slight negative skew, suggesting that while the trend is up, the model is cautious of sudden downside outliers, yet the predicted mean remains significantly above the current spot price. The 1-hour linear regression channel has a slope of plus 0.025, placing the upper channel boundary near 1.98. Module. Classification Prediction. Bullish, 89%. Detailed Technical Synthesis. The classification task is a multi-class problem, long, short, neutral, solved using a voting classifier, soft voting, composed of random forest, XGBoost, and k-nearest neighbors, KNN. The feature set includes RSI, MACD histogram, ADX, and Ichimoku cloud baseline interactions. The confusion matrix from the backtest indicates a precision of 0.88 and recall of 0.85 for the long class in similar high volatility regimes. The ROCAUC score is 0.92, demonstrating excellent class separation. Feature importance analysis via SHAP values reveals that the price greater than EMA 50 and RSI greater than 55 conditions are the primary drivers for the bullish classification. The KNN algorithm, K equals 15, identifies the nearest neighbors in the hyperspace of technical indicators, and 12 out of 15 neighbors resulted in a price increase of greater than 1.5% over the subsequent 4 hours. The model effectively filters out false positives by requiring confluence across momentum and trend indicators. Module. Clustering Prediction. Bullish, 82%. Detailed Technical Synthesis. We applied K-means clustering, K equals 8, and DBSCAN, density-based spatial clustering of applications with noise, to a 5-dimensional feature space consisting of normalized volume, volatility, ATR, RSI, ADX, and bid-ask spread. The elbow method determined the optimal K equals 8. The current data point resides in cluster 4, characterized by centroids. RSI equals 62, ADX equals 35, volatility equals low, volume equals accumulating. The silhouette score for this cluster is 0.65, indicating reasonable cohesion. Transition matrix analysis shows that the probability of moving from cluster 4 to cluster 2, defined as high volatility breakout up, is 0.72, whereas the transition to cluster 7, trend reversal, is only 0.15. DBSCAN confirms that the current price action is a core point, not an outlier, reinforcing the validity of the accumulation hypothesis. PCA, Principal Component Analysis. Visualization shows the current state vector moving away from the origin along the first principal component, trend strength. Module. Anomaly prediction. Bullish, 80%. Detailed technical synthesis. We employed an isolation forest and a one-class SVM, support vector machine, to detect outliers in the order flow and tick data. The contamination factor was set to 0.05. The model flagged the current 1H candle as an anomaly due to a divergence between delta, buying versus selling volume, and price change. Specifically, the cumulative volume delta, CVD, is significantly positive, plus 2.5 sigma, yet price displacement is minimal, less than 0.5 sigma. This discrepancy is identified by the autoencoder reconstruction error, which spiked above the threshold. In a bearish context, this might indicate distribution, but given the proximity to support levels and the positive funding rates, the model classifies this as absorption, bullish anomaly. The local outlier factor, LOF, score is 1.8, confirming the data point's isolation from the standard, low volume, low volatility, regime. The anomaly is directional, pointing towards a latent energy buildup. Module. METALEARNER prediction. Long, 93%. Detailed technical synthesis. The meta-learner utilizes a stacking classifier with a logistic regression metamodel, level 2, trained on the probability outputs, predict_proba, of the level 1 models, time series, regression converted to categorical, classification, clustering, anomaly. The input feature vector for the meta-learner is 0.91, 0.85, 0.89, 0.82, 0.80. The weights learned by the meta model assign the highest coefficients to the time series, ARIMA, LSTM, and classification, XGBoost, outputs, indicating these models have historically performed best in the current market regime, high volatility, bullish trend. The meta learner's cross-validation score is 0.93. It applies a calibration curve, isotonic regression, to ensure the output probabilities are realistic. The final decision boundary is crossed with a probability of 0.93 for the long class. The model also incorporates a regime filter that disables mean reversion logic when the ADX greater than 30, enforcing a trend following bias. Layer 2. Theoretical Analysis, Module. Chaos Prediction. Bullish Executive Summary. Chaos theory deals with complex systems that appear random but follow hidden deterministic laws. In the context of XRP, we are looking at the butterfly effect. Small buying impulses are currently creating disproportionately large price movements, which is a hallmark of a system transitioning from stability to instability, a breakout. The market is not behaving randomly, it is organizing itself into a trend. The fractal dimension, a measure of how rough or jagged the price chart is decreasing. This smoothing out indicates that the market is aligning in a single direction, up, rather than chopping sideways. We are witnessing the emergence of order out of chaos, where the feedback loops are positive. Higher prices attract more buyers, creating a self-reinforcing cycle. Chart insights. 1. Price trajectory. The price trajectory chart visualizes the raw price action over the last 15 intervals. It shows a clear, stair-step pattern of higher highs and higher lows. This visual confirmation is the primary input for the chaos metrics. The lack of deep retracements in this chart suggests that the strange attractor governing the system is pulling price upwards strongly. 2. Hurst exponent, persistence. The Hurst exponent measures the long-term memory of a time series. A value of 0.5 indicates a random walk, unpredictable. Values between 0.5 and 1.0 indicate persistence, meaning if the price went up yesterday, it's likely to go up today. The chart shows H rising from 0.51 to 0.72, confirming a transition from noise to a strong trend. 3. Correlation dimension, D2. Correlation dimension, D2, estimates the complexity of the system. A high D2 means the market is being driven by many random factors. A falling D2, as seen here dropping to 1.6, implies the market is simplifying. In trading terms, the crowd is unifying into a single consensus, buying, reducing the chaotic noise. 4. Lyapunov exponent, LLE. The Lyapunov exponent measures how fast trajectories diverge. A positive value indicates chaos, sensitivity to initial conditions. The rising positive value here suggests that the market is entering a volatile, expansive phase. While chaos sounds bad, in a trend, it means explosive movement away from the equilibrium price. Module. Statistics prediction. Bullish executive summary. Statistics is the science of probability. We are using Bayesian inference, which is a fancy way of saying, updating our beliefs based on new evidence. Initially, the probability of a rally might have been 50-50. But every time the price bounces off 1.80, that probability updates upwards. The statistical model sees the distribution of price returns shifting to the right, positive skew. It tells us that the fat tails, extreme events, are currently more likely to be on the upside. Essentially, the odds are stacked in favor of the bulls. If you played this exact market setup 100 times, you would win significantly more often than you would lose, provided you manage your risk. Chart insights. 1. Bayesian posterior probability, bullish. This chart tracks the Bayesian posterior probability of a bullish regime. Starting at 0.5, neutral, the model ingests new price candles. Each candle that closes above the moving average increases the probability. The steady climb to 0.84 demonstrates a growing statistical confidence in the uptrend. 2. Skewness of returns. Skewness measures the asymmetry of the return distribution. A positive skew, rising chart, means that the tail on the right side, positive returns, is longer or fatter. Practically, this means that while small losses are possible, the large outlier moves are happening to the upside. 3. Kurtosis, fat tails. Kurtosis measures the tailedness of the distribution. High kurtosis, leptokurtic, means the market is prone to extreme moves, outliers. As kurtosis rises, the probability of a flat market decreases. Combined with positive skew, high kurtosis signals a high probability of a sharp upward spike. 4. Monte Carlo mean forecast. The Monte Carlo mean forecast is the average price path of 10,000 simulations. Unlike a simple linear projection, this accounts for random volatility. The chart shows the expected mean price drifting upwards, validating the target price of the signal. Module. Mathematics prediction. Bullish executive summary. Mathematics views the price chart as a composite of many different waves, cycles, added together. Just like a musical chord is made of different notes, the price of XRP is made of daily cycles, weekly cycles, and hourly cycles. Our analysis decomposes these waves and finds that the dominant waves are currently in phase. This means the peak of the daily wave is lining up with the peak of the hourly wave. When waves align like this, they amplify each other, constructive interference. This mathematical alignment predicts a surge in amplitude, price, because multiple cyclical forces are pushing upwards simultaneously. Chart insights. 1. Spectral power density. Spectral power density shows the strength of the dominant cycles. The rising values indicate that the cyclical behavior of the market is becoming more pronounced and regular. A strong cycle is easier to predict than a weak one. The peak at T+0 suggests the current cycle is at maximum influence. 2. Cycle phase alignment. Phase alignment measures how well the different cycles, short-term versus long-term, match up. A value of 1.0 means perfect synchronization, constructive interference. The chart shows the cycles moving from disarray, 0.0, to near perfect alignment, 1.0, creating a superwave of buying pressure. 3. First derivative, velocity. The first derivative represents the velocity of the price change. Positive values mean the price is rising. Increasing positive values, acceleration, mean the price is rising faster. The chart confirms that momentum is not just positive but accelerating. 4. Inverse FFT projection. The inverse FFT projection takes the dominant waves identified by the Fourier transform and adds them back together to predict the future path, ignoring noise. This smooth projection shows a clear upward trajectory, filtering out the jagged movements of the raw chart. Module. Physics prediction. Bullish executive summary. Physics applies the laws of motion and energy to price. We view the price as a particle moving through a field of potentials, support and resistance. Currently, the kinetic energy, volatility, momentum, is high and directed upwards. The potential energy, distance from the mean, is increasing, but the particle has enough velocity to overcome the gravity of the moving averages. We also look at momentum conservation, the large volume, mass, times the price change, velocity, indicates a massive force behind the move. It would take an equal and opposite force, massive selling, to stop it, which is currently not present in the order book. The path of least action is upwards. Chart insights. 1. Kinetic energy, volatility. Kinetic energy in this model is derived from the square of the price velocity, volatility. Rising kinetic energy means the market is heating up and moving faster. High K is necessary to break through resistance levels. The chart shows a steady increase, indicating the breakout has power. 2. Potential well depth. Potential well depth represents the strength of the gravity pulling price back to the mean, VWAP. A decreasing value means the gravitational pull is weakening, or the particle, price, is climbing out of the well. The drop to 15 suggests the price is escaping the consolidation zone. 3. Momentum. Mass * velocity. Momentum is calculated as volume, mass, multiplied by price change, velocity. This is a more robust measure than just RSI. Rising momentum means that the price move is supported by heavy volume, making it harder to reverse. It confirms the trend is genuine. 4. Net force. Order flow. Net force represents the imbalance between buying and selling pressure, acceleration. Positive values indicate a net upward force. The chart shows a consistent positive force, meaning buyers are consistently overpowering sellers at every tick. Module. Science prediction. Bullish executive summary. Science, specifically thermodynamics, looks at the entropy or disorder of the system. In markets, high entropy usually means a balanced, efficient market, random noise. Low entropy means the market is becoming inefficient and predictable, trending. Currently, the entropy of the order book is dropping rapidly. This means the order book is becoming organized. Specifically, the sell side is thinning out while the buy side is stacking up. The system is moving from a disordered gas state to an ordered crystalline state, a strong trend. The temperature of the market, trading activity, is rising, which usually precedes a phase transition, breakout. Chart insights. 1. Shannon entropy. Shannon entropy measures the disorder or unpredictability of the price. A falling line indicates the market is becoming more ordered and predictable. In this context, the order is a directional trend. The drop to 3.2 bits is a strong signal of trend formation. 2. Market temperature. Market temperature is a composite of volume and volatility. Rising temperature means the market is becoming more active and energetic. Just like boiling water, high temperature leads to phase transitions, in this case, a breakout from consolidation. 3. Susceptibility. Susceptibility measures how much the price moves in response to a unit of volume. Rising susceptibility means the market is becoming jumpy or sensitive. High susceptibility on the upside means small buy orders are moving the price up easily. 4. Ask side liquidity density. Ask side liquidity density measures the thickness of the sell orders in the book. A dropping line means the wall of sellers is eroding. As this density decreases, it becomes easier for the price to rise, offering less resistance to buyers. Module. Biology prediction. Bullish executive summary. Biology models the market as a population of traders or a spreading virus. We use epidemic models, SIR, to track the spread of the buy idea. Currently, the infection rate, traders buying, is higher than the recovery rate, traders selling, taking profit. The idea of XRP to $2 is going viral. We also use evolutionary algorithms to simulate survival of the fittest strategies. Right now, the strategies that are surviving and reproducing, making money, are the trend-following long strategies. Short-selling strategies are dying out, losing capital. This evolutionary pressure forces the entire market ecosystem to adapt by becoming more bullish. Chart insights. 1. Viral reproduction rate, R0. The R0 value measures the virality of the bullish sentiment. An R0 greater than 1 means the sentiment is spreading. The steady rise to 1.8 indicates that for every new buyer, they're influencing nearly 2 others to buy, creating exponential demand growth. 2. Dominant strategy fitness, long. This chart tracks the fitness profitability of long strategies in the genetic simulation. As the line rises, it means long strategies are becoming more and more successful relative to other strategies, encouraging more traders to adopt them. 3. Short strategy survival rate. This chart tracks the survival rate of short strategies. The declining line shows that short sellers are being killed off, liquidated, or stopped out by the market environment. A dying bear population leaves less resistance for the bulls. 4. Infected population. Buyers. Infected population represents the number of active buyers in the SIR model. The steep upward curve shows that we are in the acceleration phase of the adoption curve for this specific price move. It hasn't flattened out yet. If this breakdown fired you up, smash that like button to power the next mission, drop a comment with your take on XRP. Bullish, bearish, or riding the short wave with us, and share this video with your squad so they don't get caught on the wrong side of the move. Hit subscribe and ring that notification bell so you're always first to suit up when Jaffo and I drop the next epic forecast. Until the next battle, stay sharp, trade smart, and keep crushing the crypto chaos. This is your commander, signing off. Remember, this is not financial advice. Always do your own research and trade at your own risk. See you in the next one.